Yeah, ma. Welcome to RT classes CA and CMA Guru. So, sir, one small concern. So many people without subscribing our channel, almost all 53% people are seeing our videos. Please, sir, it's our request. Please subscribe our channel, and because continuously you will get updates from all the concerned subjects, whatever the things we will handle from time to time basis. And even though you can send your request as well as after seeing the concerned videos, and the number is also displaying there. If you check with our concern PDF point of view also, if you see here, you can see the numbers. You can ping us, and whatever the topics you required in related to costing and auditing for CA Inter as well as CA Foundation accounting point of view, CA Foundation economics point of view, CMA Inter cost accounting, CMA Inter management accounting, CMA Inter auditing point of view, whatever the doubts you have, just go through with this, and in soon we will try to upload certain videos in related to final as well as also CMA final point of view. So my concern is, please subscribe our channel, like our videos, and because of that so many people are able to see the concern videos. That is the concern, sir, and I don't want to waste much time. Let's go to the concept quickly. Today our discussion part is regarding marginal costing. Sir, after hearing this particular name, whether you are a CA Inter student, whether you are a CMA Inter student, you know the importance of this particular chapter. Especially for CA Inter people, in the recent examination also they are concentrating much with the marginal costing point of view. And CMA Inter people, whether you are doing group 1, whether you are writing group 2, you know the importance of this particular chapter. In group 1 point of view, 14 marks question you are expecting. This particular attempt also there is a possibility to go with marginal costing 14 marks in group 1, and when it comes to group 2 point of view, 21 marks regarding marginal costing point of view, other than MCQs I am communicating. So almost all 35 marks you can expect from marginal costing related to CMA Inter group 1 and group 2 combiningly. And CA Inter people also, for you also, this is the most important chapter, and please concentrate on this concept, and especially who are writing September attempt, for you these two questions especially, because these two are a little bit different questions. I hope so you will get more clarity after this particular video. Sir, don't watch the particular videos in fast forward point of view, because success may not come in an instant and fast forward basis. So please have patience and watch the concerned video until the end. Still, if you have any kind of doubts, please try to ping us, and please try to contact us to the extent possible. Okay, sir, and let's come back to the concept. Arnav Limited manufactures and sells its product R9. The following figures have been collected from cost records of last year for the period R9 point of view. Direct material 30% of cost of goods sold is variable cost portion. Direct labor 15% of cost of goods sold, variable. Factory overheads 10% of cost of goods sold, and 2,30,000 is fixed, and general and administrative overheads 2% of cost of goods sold, 71,000 fixed. 4% is regarding cost of sales, selling and distribution overheads, that is 68,000 fixed cost. Last year 5,000 units were sold, 185 per unit. From the given data, find the following: break-even sales, profit earned during the last year, margin of safety percentage, profit if the sales are 10% less than the actual sales point of view. First, this problem point of view, working notes will play an important role, Nana. So now that's the reason, let's start with working notes itself. Yes, sir, let's start. Okay, first we'll find out the cost of goods sold and all these things. Let's see. calculation of cost of goods sold. Cost of goods sold equal to direct material plus direct wages plus factory overheads. Yama, any more? And add general and administrative overheads also. After adding all these things, Nana, we will get cost of goods sold amount. Ma, what is the direct material cost here? If you understand, they said 30% of cost of goods sold. So, cost of goods sold equal to 0.3 of cost of goods sold plus direct wages 0.15 of cost of goods sold plus factory overheads 10% of cost of goods sold plus how much amount they are incurring in addition to that, 2,30,000 fixed cost plus in related to this administrative overheads 0.02 cost of goods sold plus 71,000. Am I correct? Direct material is not minus, sir, that is direct material 0.30% of cost of goods sold itself. Now if you understand this thing, 0.3 plus 0.5 plus 0.1 plus 0.02, combiningly we are getting 0.57 cost of goods sold plus 2,30,000 plus 71,000 more, we are getting 3,01,000. Then you are getting cost of goods sold. So now if you move that side, 0.43 cost of goods sold equal to 3,01,000. Cost of goods sold equal to 3,01,000 divided by 0.43, that is equal to 7 lakhs. Yeah, Nana? You can do some another manner also. Sir, what way? ORR. Let X be the cost of goods sold. Therefore, X equal to 0.3x plus 0.15x plus 0.1x plus 2,30,000 plus 0.02x plus 71,000. Yeah, because material is 30% on cost of goods sold, labor is 15% on cost of goods sold, factory overheads 10% on cost of goods sold, variable part plus 2,30,000 fixed, administrative overheads are 2% on cost of goods sold plus 71,000. But normally general administrative overhead should not be form part of cost of production when it belongs to CA Inter people point of view. But here they said it is as a percentage on cost of goods sold, means we are assuming that that should be a form part of cost of goods sold itself. And CMA people, after adding administrative overheads and after that you are getting cost of production, add opening and closing stock of finished goods, then you are getting cost of goods sold itself. Yes, sir. So after solving the concerned things, x equal to 0.57 x plus 3,01,000. Therefore, x equal to 3,01,000 divided by 0.43, that is equal to 7 lakhs we are getting. This is what Nana? Cost of goods sold. Yes sir, one more time check the question. 30% of variable portions, these are all, plus this is the fixed part. This is 3,01,000. These are all combiningly 0.57 or 57% of cost of goods sold. Now once you got the cost of goods sold, immediately our next step is what? Finding the cost of sales. See sir, how to find out cost of sales? Calculation of cost of sales. If you understand the question, for cost of goods sold, if you add selling and distribution overheads, what we will get? Cost of sales equal to cost of goods sold plus selling and distribution overheads. Then you will get cost of sales. Our cost of goods sold, how much? 7 lakhs plus, let it be X. Then this will be how much they are providing? 4% of cost of sales plus 68,000. That is equal to 0.04x plus 68,000. If you move this one this side, you are getting 0.96x equal to 7,68,000 we are getting. Therefore x equal to 7,68,000 divided by 0.96. Then we are calculating, after that we are getting 8 lakhs. So this is your cost of sales. This is your cost of goods sold. Yes sir, I think so you understand the points. So first, by using these informations, we calculated cost of goods sold. Later on, by using this information, we calculated cost of sales. Whenever you find out these two things, immediately you can find out two costs. One is variable cost, calculation of variable cost. Same way, immediately you can find out one more, that is calculation of fixed cost. Okay, sir, we done with the two working notes. This is working note 1, this is working note 2, this is working note 3, this is working note 4. Okay, let's see calculation of variable cost, particulars and amount. First start with direct material. If you check with the question, what is the percentage they are communicating? 30% on cost of goods sold. So 7 lakhs into 30%, that is equal to 2,10,000. Then direct wages, that is 15% on cost of goods sold, that is equal to 1,05,000. Then factory overheads, 10% on cost of goods sold, that is equal to 70,000. Then administrative overheads general, 7 lakhs into 2% on cost of goods sold, that is equal to 14,000. When it comes to selling and distribution overheads, they are 4% on cost of sales. On what sir? Cost of sales into 4%, that is equal to 32,000. After adding all these things, we will get total variable cost 46,116,230, 4,30,000 31,000 is our total variable cost. Sir, how find out? Based on this information. Once you find out cost of goods sold are 7 lakhs, these are all parties nothing but what? Variable cost portion. On that you will apply 30% material, 15% labor, 10% factory overheads, 2% cost of goods sold point of view, general and administrative overheads, 4% cost of sales, that is selling and distribution. This is our fixed part. Now that is our next calculation. See ma. So particulars amount. Let's see the first start with factory overheads already given in the question. 2,30,000. Next ma, administrative overhead general given 71,000 fixed. Selling and distribution overheads given 68,000. These are all information already given in the question. If you add all the things, we are getting 3,69,000 is the total. This is total of variable cost. This is total of fixed cost itself. Now once you got these things, you can find out immediately. First step is what? 5,000 units were sold, 185 per unit. So sales into selling units into selling price, you will get total sales. Already you know your variable cost. Then you can find out contribution. You know sales, you know contribution. What you can find out? You can find out PV ratio. Sir, why? What is the first point they are asking? Break even sales. Yeah, ma. So now write down contribution equal to sales minus variable cost. Sales how much? 5,000 units into 185 per unit minus 4,31,000. This is working note 3. 5 lakhs into 185, how much ma? 1 minute, sir. Yeah, ma, let's see. 5,000 into 185, that is equal to 9,25,000 minus 4,31,000 minus 4,31,000. We are getting contribution of 4,94,000. Therefore, profit volume ratio equal to contribution by sales into 100. That is equal to 4,94,000 divided by 9,25,000 into 100 divided by 9,25,000. That is equal to 53.41% is the PV ratio. Once you got the PV ratio, first bit what they are asking? Break even sales. What is the formula ma? Fixed cost divided by profit volume ratio. Already fixed cost we calculated 3,69,000 divided by 53.41%. That is equal to 6,90,882 itself. This is what Nana break even sales. What is the second bit they are asking, sir? Profit earned during the last year. Second bit, profit. What is the formula? Contribution minus fixed cost. You know both the amounts. Yeah, that is equal to 4,94,000 minus 3,69,000. Then we are getting 1,25,000 is the profit what we earned in the last year point of view. Then what is the third bit, Nana? We done with break-even sales in rupees, profit earned last year, margin of safety in percentage they are asking. Sir, you know break-even sales, you know total sales 9,25,000. So third bit, margin of safety equal to, we have two formulas. One is profit divided by PV ratio, you can use ORR, total sales minus break-even sales. You can use any of the formulas, that is equal to 1,25,000 divided by 53.41 percentage. 1,25,000 divided by 53.41 percentage. That is equal to 2,34,039 rupees. But they are asking margin of safety percentage. That is equal to 2,34,039 margin of safety divided by total sales into 100. That is equal to 25.30 percentage. This is what third bit answer. Now let's see what is the last bit they are asking. Profit earned. So I am removing this part now. Profit if the sales were 10% less than the actual sales itself. Fourth bit revised sales equal to 9,25,000 into 90%. So 9,25,000 into 90%. That is equal to 8,32,500. Yeah. Then revised variable cost. 4,31,000 into 90%. That is equal to 3,87,900. So revised contribution 8,32,500 minus 3,87,900. That is equal to 4,44,600. ORR, instead of writing all these things, revised contribution 4,94,000 into 90%, then also you will get 4,44,600. Then profit equal to revised contribution minus fixed cost. Already we know revised contribution 4,44,600 minus 3,69,000 fixed cost. No change in fixed cost, that's the reason we are continuing with the say that is equal to 75,600 rupees. This is the way, Nana, we need to calculate our revised profit if sales are decreased by 10%. One more time, just see the question. You know that your direct material is 30% on cost of goods sold and direct wages are 15% on cost of goods sold, variable cost percentages, and factory overheads are 10% plus 2,30,000 fixed part is also there. Administrative overhead general 2% on cost of goods sold plus 71,000 fixed cost with you. And when it comes to selling and distribution overhead, 4% on cost of sales plus 68,000 fixed cost. I don't know cost of goods sold, that's the reason let it be X itself. So 30% is the material cost, that's the reason we got 0.3x of material cost, 0.5 of labor cost plus 10% of factory overheads plus 2,30,000 plus 2% of cost of goods sold plus 71,000 itself. Correct, sir? Yes, sir. By using the concern things, we got our cost of goods sold related information. This by solving the concern thing, we got our cost of goods sold is 7 lakhs. Then cost of sales computation. We know cost of sales equal to cost of goods sold plus selling and distribution overheads. By using the concern formula, we know that selling and distribution overheads are 4% plus 68,000 fixed. By solving the concern things, we got cost of sales itself. Then total variable cost, by using the percentages we computed, fixed cost also we computed. Once you know the variable cost and already they given the number of units and selling price, once you know the sales and variable cost, you can find out contribution. Once you calculated the contribution, you know sales, you can find out PV ratio. What is the formula? Contribution by sales into 100. When it comes to PV ratio, what is the formula? Contribution by sales into 100. Once you calculated the PV ratio, you already calculated the fixed cost. By using the fixed cost and PV ratio, you can find out break-even sales. Once you got the break-even sales, second point what they are asking, what is the last year profit? What is the formula? Contribution minus fixed cost. You know sales, you know PV ratio, so you can find out contribution. Contribution minus fixed cost, you will get profit. Next, margin of safety. Here you have two formulas. Profit by PV ratio you can use, or total sales minus break-even sales also you can use. Once you find out the margin of safety, you know total sales, then margin of safety percentage equal to, margin of safety divided by sales into 100. Or you can do one more thing, you know break-even sales, what is the percentage of break-even sales, calculate on total sales. Once you know the break-even sales percentage, 100% minus break-even sales percentage, then also you can find out margin of safety itself. And finally, if your sales are decreased by 10%, directly you can do what is your revised contribution, because sales is as a percentage on, variable cost is as a percentage on sales. That's the reason if it is decreased by 10%, sales is 90%, variable cost is also 90%, then your contribution is also 90%. Already you know your contribution is 4,94,000. On that, if you apply 90%, you will get revised contribution, and fixed cost point of view no changes. Once you find out that, you got the profit part. This is the way we are supposed to solve the question. I think so this is completely a different question, and you cannot find out these questions from study materials also. Even in the last examination also, you don't have these kind of questions. That's the reason, students, please practice these kind of questions so much. So that is the reason we are bringing all these questions to you. You need to be very perfect in related to conceptual clarity point of view. Okay, sir. And when it comes to next question, this is about marginal costing versus absorption costing point of view. So many people are facing some kind of issue with these questions. That too, this question also I am taking different question and I try to solve this particular question, and I think so it makes you a lot of sense. You can understand marginal versus absorption costing also very comfortably. Let's see the question. So mega company has just completed its first year of operations. The unit costs on normal costing basis are as under: direct material given, direct labor given, variable overheads also given. Fixed overheads should not be a form part of your marginal costing point of view under decision making. That means under marginal costing, what is the total cost per unit? Variable cost per unit is 82 rupees. But see, certain changes are there. Variable cost selling and administrative 20 per unit, fixed is 7 lakh 60, units produced given, units sold given, selling price given, direct labor hours worked provided. All fixed overheads were 48,000 less than the budgeted fixed overheads, and budgeted overheads was 20,000 less than the actual variable overheads. So SEMA budgeted variable overheads was 20,000 less than the actual variable overheads. Sir, how to find out then variable overheads part? Let's see while we are solving that particular things in the question point of view. The company has used an expected activity level of 72,000 labor hours to compute the predetermined overhead rates. So what is the income under absorption costing and marginal costing, under recovery na, over recovery na, and they are asking reconciliation also under marginal versus absorption costing point of view. Before starting this question, one major concern, what is the difference between marginal costing and absorption costing? In marginal costing, you need to split your cost into fixed cost and variable cost itself. Because under marginal costing, which cost should not be taken into consideration for decision making point of view, means that is fixed cost. That's the reason another name for marginal costing is variable costing also. But when it comes to absorption costing, the total cost should be taken into consideration for decision making. You don't want to split your cost into fixed and variable part itself. And another important thing we need to discuss, when it comes to valuation of inventory, under marginal costing, only variable cost only should be considered. When it comes to absorption costing, what should be considered? Total, that means both fixed and variable should be considered. That is the reason whenever you are doing the valuation of inventory point of view, there is some kind of difference between marginal costing calculations and absorption costing calculation point of view. Even marginal costing point of view, overheads recovery concept was not there. What is the actual overheads incurred, that is only should be considered whenever we are doing under marginal costing. But when it comes to absorption costing, there is a concept of under recovery, over recovery, absorption will coming into the picture. There is some kind of difference between your production capacity, normal production capacity and actual production capacity, or the budgeted overheads and actual variable overheads point of view, some differences will come. So the recovery, absorption meaning words recovery or levy. So this kind of effect should be there in absorption costing point of view. The title itself is indicating that absorption, there is some levy based on the production. But when it comes to marginal costing, what is the actual production cost we incurred, that is only we will take in related to factory or in related to administration or in related to selling part. Only actuals should be recorded under marginal costing point of view. Let's explain this concept thoroughly in a beautiful way to get more clarity about marginal versus absorption costing problems point of view. So now let's see, sir. First find out the certain things. First we will calculate some working notes. What is that? What is the cost of goods sold amount and all these things we'll calculate, or we'll do one thing straight away also we can calculate, because they are asking what's a unit cost point of view and total income under these two are they are asking. Yeah. So first start with calculation of cost of goods sold. Why we are doing like this? Just wait, have patience and listen thoroughly, then you can understand why I am starting with cost of goods sold. Particulars under marginal costing, under absorption costing, both at a time I am calculating. Please listen carefully. First start with direct material. If you understand the question, they said 16 rupees per unit. Sir, where they given? Here, sir. Into how many units produced? 24,000 itself. That is equal to 3,84,000 when it comes to marginal costing as well as absorption costing point of view also. Next direct labor at the rate 54 nana. 54 into 24,000, that is equal to 12,96,000 under marginal costing as well as absorption costing also. Then variable overheads. See sir, concentrate much. Here what happening? 12 rupees per unit given for 24,000 units. Correct, sir? 12 rupees 24,000. But what they said, see, budgeted variable overhead was 20,000 less than the actual variable overheads. Already I told you, under this concept point of view, variable part, we are supposed to add 20,000 rupees, because when compared to the concerned things, budgeted variable overheads are less than 20,000 than the actuals. That's the reason we are taking actual variable overheads 3,08,000. Here also 3,08,000 itself. When it comes to fixed overheads, see the computation. 18 into 24,000, that is equal to 4,32,000 under absorption. Don't consider under marginal costing point of view, because marginal costing point of view, fixed cost doesn't taken into consideration. If you add all these things, we are getting 19,88,000. 4,32,000 added means 90,20, that is equal to 24,20,000 itself. Now why we ignored fixed overheads under marginal costing? Marginal costing point of view, first if you want to find out the cost of goods sold, which is the part should not be included, fixed part should not be included. Then valuation of inventories. Add opening stock of finished goods less closing stock of finished goods. Okay, so now opening stock of finished goods, anything provided in the question? No. That's the reason we will put hyphens in both the cases. Closing stocks are yes. Here little careful. The valuation of inventory point of view, I told you Nana already, your variable part is how much, fixed part is how much, very careful. This is your total cost of production part under marginal. This is under absorption point of view. The closing stock inventory valuation point of view, under marginal costing, fixed overhead should not be included. That's the reason we doesn't consider here also. But when it comes to absorption costing point of view, the valuation of inventory point of view, fixed part is also included. That's the reason we added fixed production overheads. Got it? So now here see the calculations. 19,88,000. This is the total production cost. This is for totally 24,000 units, and you sold how many? 21,500. That means 2,500 will be your closing stock of finished goods. Here 24,20,000 divided by 24,000 units into 2,500 units. Sir, if you understand theoretically what we mentioned, that is only we are calculating here. See, at the time of valuation of inventory under marginal costing, which cost doesn't include period cost like administrative, selling part to any of the fixed things should not be included, because marginal costing inventory cost should be inventorable cost point of view. Only variable part of cost should be taken into consideration. But when it comes to absorption costing, even fixed part also should be included. That means product cost point of view, fixed production overheads overheads also included under absorption costing. When it comes to marginal costing, under so cost of production point of view, we doesn't include fixed factory overheads or fixed production overheads itself. That's the reason valuation of inventory point of view, you can find the differences as well as. Here it is 2,07,083 is the closing stock of finished good. This is, you are getting 2,52,083 rupees we got. Once you eliminated your closing stock of finished goods, then you will get cost of goods produced. This is 17,80,917, 21,67,917. So normally cost of goods sold na, but we have some adjustment here. Let's concentrate. Add adjustment for under or over absorption. Adjustment for under or over absorption. If you understand the things, how we got 48,000, SEMA here. Actual fixed overheads was 48,000 less than the budgeted fixed overheads. When it comes to absorption costing, 48,000 rupees we will show more towards the thing. SEMA, when compared to budgeted fixed overheads, actual overheads was 48,000 less. This means actual production overheads plus 48,000 we will show. This actual production overheads only we will see under marginal costing. This 48,000 where we will see absorption costing part, because under absorption costing not based on actuals, budgets basis we will go for it. How much I want to recover, that should be reflected in the books of accounts point of view. That's the reason this adjustment for under or over recovery should be reduced here. Then not here under absorption point of view, 48,000 we are deducting. Then you are getting cost of goods sold under marginal 17,80,917. Here 21,19,917 itself. Give star mark for this. Sir, you said add under or over absorption part. Why you are deducting means you are showing 48,000 rupees of expenses more. That's the reason I am deducting that amount of expenditure. Got it? Sir, one more time see the question. So your direct material, direct wages, variable overheads given, we took the particular things. Got it? When it comes to here, direct material, direct labor, variable overhead SEMA, why we are adding 20,000? Here see the question. Budgeted variable overhead was 20,000 less than the actual variable overhead. That means actual variable overheads are more than 20,000 than the budgeted variable overheads. So 24,000 plus variable overheads, how much more? 12 rupees. Then you will get budgeted variable overheads. Further, you need to add 20,000. Then you will get the actual variable overheads how much. Once you got the actual variable overheads, then fixed overheads, and already we know that under marginal costing point of view we doesn't include the fixed part. So that's the reason this part should be adjusted only for absorption costing. Sir, how you got it? 18 rupees fixed overheads plus 24,000 itself. Totally you got the concern part. So 4,32,000 itself. Opening stock was not there. Closing stock, here sir give some star mark, because the closing stock valuation, which is the only cost, should be considered under marginal costing point of view, only variable cost of production. But when it comes to absorption costing, which cost should be included? Total cost. Even fixed production overheads also should be included. That's the reason we added. Then we got cost of goods produced part. Sir, why we are deducting this part? 48,000 amount of expenditure. See sir, here actual fixed overheads 48,000 less than the budgeted fixed overheads. That's the reason we are doing the concern things. Sir, understand? Sir, how you got under our over absorption? For this I will give you some working notes. Let's see here, you will get more clarity. Under our absorption, under our over absorption, let's see ma. First, fixed overheads. First, budget point of view, how much 6 rupees per hour into 72,000 labor hours, that is equal to 4,32,000. Yeah ma, where they given 6 rupees, this is, got it ma, 6 rupees is the fixed overheads. Totally how many labor hours you have with you? 72,000. That's the reason 4,32,000 is the budget. Then ma, what is actual? 4,32,000 minus 48,000, then you are getting 3,84,000 actual fixed overheads. Then the difference is 48,000 you are showing more. That's the reason we are calling it as over absorption. When compared to actuals, budgets are 48,000 more ma, that's the reason we are getting over absorption. Then nana, variable overheads. See the budget, once again 72,000 direct labor hours only. See the question, what is the variable overhead rate per hour nana? 4 rupees itself. So 72,000 into 4 ma, that is equal to 2,88,000. So now actual, what they said, when compared to budget, actuals are 20,000 more. That's the reason we are getting 3,08,000. Difference is 20,000. This is what we can call it as under absorption. When compared to actual, budget is less. That's the reason what we are getting ma, under absorption itself. Got it ma? I hope so you understand how we got here adjustment of the concern thing. What about variable parts, sir? That is already adjusted here if you got the things. That's the reason only we took 3,08,000. Now sir, we are done na? No, not yet done. First, we got the cost of goods sold. What they are asking, what is the unit cost and total income under absorption costing or marginal costing. This is already we done. Once if you calculated these two, then we can do reconciliation part itself. Let's see nana. First, computation of unit cost. Particulars, absorption costing, marginal costing. First start with direct material 16, then direct wages 54, given in the question. Variable overheads, little careful, it was 3,08,000 divided by 24,000. Then we are getting 12.83 here, 12.83 here. Then my fixed overheads already given 18, doesn't consider. Then unit cost here 100.83, here 82.83. This is the unit cost. Now we are calculating what? income statement. Which concept? Absorption costing point of view. Now see, particulars amount. Start with sales 168. 168 into 21,500. Then we are getting 36 lakh 12,000 itself. Less cost of goods sold, already calculated under absorption costing. How much? 21 lakh 19,917. Less selling and distribution expenses. See how much selling and distribution expenses given in the question? 20 per unit. 20 into 21,500. Then you are getting 4 lakh 30,000. Yeah. Now total will be, or if you want, variable 21,500 into 20, that is equal to 4 lakh 30,000, and fixed was given 7 lakh 60,000. After adding this, you are getting 11 lakh 90,000. This is also should be deducted. Then you are getting profit. See 11 lakh 20 and all the, that is equal to 3 lakh 2,083 rupees profit under absorption costing. Now once again, income statement, but under marginal costing. Yes sir. Particulars amount. Sales same, no change. That's the reason 36 lakh 12,000 less cost of goods sold, and already you know cost of goods sold are how much? 17 lakh 80,917. These are all variable part. If you eliminate that, you are getting 18 lakh 31,083 rupees. Less selling and distribution expenses also variable, 4 lakh 30,000. If you deduct 21,500 into 20, this is variable cost of production part. Selling and distribution eliminated, then you are getting contribution. How much sir? 14 lakh 1,083 rupees. Now eliminate fixed cost. You have two fixed costs with you. One is fixed factory overheads. How much Nana? 3 lakh 84,000. Actual only we are supposed to take. And selling and distribution overhead fixed 7 lakh 60,000 itself. Combiningly you are getting 11 lakh 44,000. If you eliminate, you are getting profit under marginal costing 2 lakh 57,083 rupees. Sir, from where you got this 3 lakh 84,000? See here. This is actual fixed overheads, and already I told you recovery budget should be come under where absorption costing point of view. Actuals where it will come marginal costing point of view. That's the reason we recorded here. So once you got the profit of both the things, now we are eligible to do reconciliation of profit. Very easy Nana, reconciliation here. First, profit as per marginal 2,57,083, and immediately point you supposed to remember, that is what? Same sales. So cost of goods sold adjustment already done now. So where you got the difference, sir? If you check with the statement here, see, same material, same labor, same variable overhead, fixed overheads part already adjusted, and opening stock there, closing stock, let's see here how much, 2,07,083, 2,52,083. 45,000 rupees of closing stock was overvalued under absorption costing. One more time, sir, closing stock was overvalued in absorption cost. That means under marginal costing, profit was decreased by 45,000. To get the right profit, that should be add back. That's the reason add under valuation of closing stock in marginal costing that is equal to 2,52,083 minus 2,07,083. 45,000 should be added. Once you add back, you are getting difference. Sorry, 3,02,083 itself. That is profit under what, sir? Profit as per absorption costing. Yes, sir. Here the important thing is 48,000 under absorption should be do under profit point of view. Here you can do adjustment of the concern things of showing of more expenses. Either you can deduct from expenses or you can add back to the profit also. Anything you can do. Yes, sir. This is the way we are supposed to calculate marginal versus absorption costing itself. See, sir, first we started with all the variable cost of productions, but only part should be ignored whenever you are doing the production cost. Under marginal, fixed part should be ignored. But when it comes to absorption costing, don't take the actuals, go with budget point of view. That's the reason where the budget was given. See, sir, this is budget 6 rupees per hour, 72,000 labor hours are there, 6 rupees already given in the question. We got 4,32,000. This is what we will take under absorption cost. What about 3,84,000? That should be covered under, see, sir, here marginal costing. Already I told you actuals should be take under marginal costing point of view. Budget should be take under absorption, because absorption should be based on recoveries. That's why. Then you got the opening stock no adjustment, closing stock based on cost of production per unit, because already we know that closing stock always should be valued based on cost of production per unit. But the difference is under marginal costing only variable cost we are considering. If you observe, when it comes to absorption costing, you are considering even fixed cost also. That's the reason always your closing stock under absorption costing is more than the marginal costing itself. That's the reason absorption costing is getting more profit than the marginal costing itself. Then adjustment of under or over recovery. Sir, why you are deducting from the expenses? You are showing 48,000 rupees of expenses more under absorption costing. That's the reason you have two options, either decrease from the expenses or you can add back to profit part also. Anything you can do, not an issue. Yes, sir. Once you got the things, then you calculated under or over absorption. How much I want to recover fixed production overheads? 4,32,000. But actually how much only I incurred? 3,84,000. I want to recover more than my actual. That's the reason we got over absorption. When it comes to variable overheads, sir, budget is 2,88,000 only I want to recover. But when compared to budget, actuals are 20,000 more. That's the reason you are showing under absorption. You want to recover 20,000 less relating to recovery point of. That's the reason we are calling it as under absorption. then we calculated the cost per unit concept, then we calculated the income statement. Already you know sales, they given 21,500 units are sold out of 24,000. That's the reason only at the time of valuation of closing stock we took 2,500 units. Sales minus cost of goods sold, don't write straight away adjustment. You have selling and distribution expenses, variable part and fixed. How many units we sold? 21,500. What is the variable selling expenses per unit? 20 rupees. That's the reason we calculated, we got the profit. Here sir, sales minus cost of goods sold, that is only consists of variable part. In your cost of goods sold point of view, which is not included selling and distribution cost. That's the reason that's shown separately. Deducted from sales, we got contribution. From that we deducted the fixed cost. Finally we arrive at profit part. Then we did the reconciliation. If you check with the entire part, only difference, one is fixed production overhead, second was closing stock. Already fixed production overheads are adjusted here itself in the cost of goods sold itself. That's the reason no need to adjust once again under reconciliation statement. Your closing stock under marginal costing is 45,000 less than the absorption costing. That's the reason to get the right profit. Whenever you are doing the undervaluation of closing stock, to get the right profit, that 45,000 rupees should be added. That's the reason we add back 45,000. We arrived at the profit of absorption costing itself. I hope so. Now you understand the concept of marginal versus absorption thoroughly, and once again practice this question, and I hope so you enjoy the session. And one more time from my end requesting, please share to the friend, please like, please subscribe our channel RT Classes CA and CMA Guru. Our intention is to provide a quality of service and good knowledge and some variety of question students should aware, and they may be able to solve that kind of questions, because whenever you are conceptually good, these kind of things will happen. I hope so you enjoy the session. Bye sir, have a nice day. Sign off, RT sir.